Let's get started. Thank you for being on. We appreciate it. This webinar is going to be it's co-sponsored by Protect Wealth Academy and with Tax Hive. And we're grateful for Tax Hive's relationship with Kevin O'Leary. Kevin is a partner with them, an investor with them, and we're delighted to be able to pick his brain a little bit. So let me see if I can get this slide to advance. Here we go. If you're new to us, if you're just joining us, this webinar series has been going on for over 10 years. Some of the great webinars we've got planned for in the next couple months: how to reduce your taxes with Tax Hive, cost segregation, last minute tax strategies with Scott Estel. Scott, remember, was a former senior trial attorney with the IRS. He's turned around and sued them over 2,000 times, representing 3,000 clients, and he just doesn't miss. Mike Koval will be on our stage talking about nonprofit corporations and talking about protecting intellectual property. Some people forget how important an asset that is. And so pay attention to those. All of the recordings or all the webinars that we do are recorded. They're available on our YouTube channel. So you'd go simply to YouTube and type in Protect Wealth Academy and hit subscribe, and you'll have access to all the webinars that we do, including this one. Give us about a day to get it posted, and then even this recording. If you miss any part of it or you want to share it with your friends, you could do that with Protect Wealth Academy. We're less than a week away now from our next 3-day Asset Protection Summit. We've got an amazing lineup of speakers coming for this. Clint Coons, Jill Banner is the president of iPlan Group, an IRA custodial group. You've got Mike Koval, again, Scott Estel. Dr. Bill Danko is the co-author of The Millionaire Next Door. This is the longest running asset protection class anywhere in the nation. We're doing what we love, and that is teaching how to reduce taxes, how to protect their assets from lawsuits, how to tie in an estate plan to everything you do. This is what we do. We're Protect Wealth Academy. If you'd like to see an agenda of what's going to be happening, this is not a wussy little class. We are serious asset protection geeks. You can find that at Protect Wealth Academy. And it's not too late, because the next event coming up is a Zoom class. And so we can always add on a few more people. If you need continuing education credit, you're an attorney or a CPA, that you can contact us and we can tell you how that works. Okay, and before we ever talk taxes and legal, there's always a legal disclaimer. And the principles that we teach on our classes, including this webinar tonight, we can't give specific advice. Don't take anything that we say verbatim and go, this is a strategy that applies to me. I hope it does, but we'll give you an offer at the end where we're going to offer you a consultation and to see whether the strategies that we talk about really apply to you and your situation. And so let me give you kind of a rundown of how the seminar or the webinar is going to work. We had planned on, we've interviewed a lot of students, and we've come up with some questions for Kevin. Kevin is coming into this absolutely blind. We haven't given him a list of the questions, but he's so sharp. We're so excited to have him on. But keep your questions to, we'll let him present for about 30 minutes, and then we're going to open it up to you and answer your questions for about 15, 20 minutes is all. And then, but don't type in your questions yet. There will be a place for you to, and we want you to type them in, not into the chat screen, but in the Q&A screen. And so, but hold on your questions, because he may very well get to the questions before you ask him. But there'll come a time I'll ask you to type in your questions. we'll select as many as we can, get through as many as we can before Kevin has to go. So with that, and the recording of this will be available tomorrow. All right. So with that, I see Mr. Wonderful.
Yes, I'm here. Thank you.
Joining us. Kevin, pleasure to have you. We are so excited to have you aboard and be able to answer some questions, and you look wonderful.
Thank you very much.
All right. So Kevin, I think the question that's going to come up as much as anything, there's so much uncertainty right now. And there's a little bit of mistrust. I know that there's a State of the Union address coming tonight. But people have a huge mistrust for politicians right now. And you're known for being brutally honest. So how is Ukraine and inflation and oil prices and interest rates, how does this all play together? Give us a brief State of the Union address from your perspective, would you please?
Sure. Let's all take a deep breath on the current situation and think about, as investors now, what we should be thinking. Because let's start about Ukraine. What's happening there is horrific. There's no question about it. I mean, it's just horrible. However, what impact is that going to have on S&P earnings in 2022? Practically nothing. Ukraine is just not a factor in US GDP. It's less than 1% or just around 1%. There's nothing good about what's happening there, but it's very difficult to talk about this, but you have to separate the reality and the economics versus what's actually occurring. So US banks have very little exposure to Russia. Russia is a third world country with a very strong military arm. It's a tiny little economy based on one commodity, oil. It's a rogue nation led by an unusual individual who I think has made a grave mistake. And I think my own prediction is just a single prediction. But if you look at history, and I'm a bit of a history buff, when a leader makes a calculated move and is wrong, and in fact causes great grief on the people of the country, and in the case of Russia, it's going to be inflation. The ruble is collapsing. Access to everything from semiconductors to just basic technology is being removed from them. Access to capital outside of the country, restrictions on travel. Individual Russians can no longer leave the country, including athletes, you name it. It takes a while for that to permeate through, maybe up to a year or so. But if you look at history, and I'm not predicting anything, but if you look at history of despots like Putin, it ends badly for them, often in a hunting accident or something like that. I mean, look, it's tragic, but history is not kind on people that lead countries and don't care about the citizens. And that's clearly what's happening here. Unprecedented unity. What I found most interesting and very difficult, I think, for the Russians, particularly the oligarchs, which supposedly are supporting Putin, is what the Swiss did yesterday at 4:05 when the markets closed. There hasn't been many cases, and I don't recall one ever, where the Swiss have basically sequestered the capital of nationals from a country. Switzerland was always Switzerland. And whether you were a despot or whatever you were, your money in Switzerland was in Switzerland and safe. Not so for Russians today. That's extraordinary. My guess is that those close to Putin are not happy about that. That is where the majority of their family wealth is. I'm predicting a hunting accident.
Talk to us about what you see happening with inflation and oil prices, because that will affect most Americans.
Yes, it will. And it's doing that right now. Our inflation of oil is a self-inflicted wound on bad policy. As you know, prior to the changes. And I don't want to get into politics. I'm just talking about policy.
I understand.
Yeah, policy. The policy was pro-oil independence prior to the change in the current administration. Everybody wants to go to a cleaner form of energy. There's no question about it. And that takes time. Look what happened to the Germans. They shut down the nuclear. They relied only on Russian gas and oil, and they're in a bad shape right now. The French were a little more savvy about it. They realized that they were, very exposed, and they took other precautions. We here have unlimited amount of energy if we wish to extract it. Shutting down the Keystone was not a good decision. That is about energy security. Now, whether you like it or not, or whether you agreed with the previous administration, the salt mines under Louisiana, the strategic oil reserves, were completely filled while oil was basically free, which was a very smart move. And so we can draw a lot on that. We need to change policy on oil extraction, fracking, et cetera, land leases, prices of carbon on land lease, going from $7 to $58, not a good idea. And I understand that. It's just that energy is the core of an economy, and you need to make sure that you have a secure source of it. And luckily we have that. We have to fix our policy. Now, the reason this may change politically, every sitting president, regardless of party, loses seats in the midterms. This particular administration is probably going to get decimated in the midterms unless they fix two things: the price of a gallon of gasoline and the price of protein such as chicken and beef and everything else that's in food. Everybody feels the pain every day when you're filling up your car and you're buying food for your family. Inflation is rampant right now. That has to be fixed immediately. I'm sure the president in the State of the Nation tonight will address these issues. Otherwise, it's going to be a very ugly midterm election.
Kevin, you always have your hands in something exciting. You're an international investor. You've traveled the world. You invested in the world. With everything going on right now, where are you putting your time and your energy and your money? Would you share that with us?
Yeah, sure. I do a lot of work in the indexing markets where I advise for sovereign and pension plans. And some of these countries around the world have huge amounts of capital they want to put to work. At the end of the day, when you look at it, the majority of it goes in the S&P 500. It really does. Most people want to invest in America. And right now, because we're going through a lot of uncertainty, obviously the Ukraine situation, et cetera, et cetera. But at the end of the day, the best thing to look at is to take stock of the current economic situation right here. And for all of the angst, and I know there's a lot of it, and the Fed and everything else, business is booming in America. I have over 40 private companies that are everything from insecticide to gym equipment to wireless charging, commercial kitchens. It's booming. I mean, it's really booming. And I know we have supply chain problems and there's all kinds of issues, but the core economy is doing quite well. And so with the exception of certain sectors, obviously airlines have been troubled by the last 2 years and their balance sheets are upside down. But basically, I see no reason to sell my S&P 500 stocks. And, I think earnings will be up about 8% this year with about a 1.5% dividend yield. So a 9% yield. I'm like everybody else, I'm speculating, but I'm certainly not going to buy bonds with the Fed probably going to raise rates 3 to 4 times. I'm pretty sure that when the Fed, and we're going to hear from the Fed this week, the 50 basis point raise is off the table, given the geopolitical issues. I think 25 basis points, which we could actually use, because the reason the Fed is raising rates is because the economy is strong. And, that's a double-edged sword. I mean, obviously, they've got to raise rates. That's negative for stocks. But at the same time, if it's because of a strong economy, I'm just bullish on America, basically. So I have 2/3 of my my investments stateside. And then Europe has just got slaughtered, and yet they've been killed. But they've got some great companies. There's 50 companies over there like Nestle and Roche and others that I've invested in recently because they're selling at a huge discount, but most of their sales are right here in the US. Everybody knows Nestle. If you're a mother and you've raised kids, you heard of that brand. Roche, fantastic drug company. These are Swiss companies, or they're British, or they're Euro, or in Germany, but they're big and they're on sale. Everybody hates the European discount, so that's 20% of my portfolio. And then I'm a big believer in technology, which has been very volatile, but technology is what saved us in the pandemic. Nike made a big announcement just the last 48 hours. They're pulling out of or removing products from Foot Locker because they're now selling direct to consumers all around the world. The reason they can do that? Technology. And there's a big change going on there. And I have a lot of tech stocks, and you got to hold your nose with the volatility. But it's like Amazon. I've owned it for 17 years. And more than half of those years, it had corrections between 38 and 50% every 12 months. But look where we are now. You got to believe in American ingenuity. You got to invest in it. You got to hold on to your socks and ride that crazy roller coaster because it is volatile.
All right. So, Kevin, we are Protect Wealth that specializes in legal structures and tax savings, and so does Tax Hive. If you were looking at and investing in a business, how important is their tax and legal structure?
Well, I've been doing this for decades, and I've also invested in many entrepreneurial businesses and many family businesses. What you have to understand is that the US government wrote the tax code not as an adversary. They wrote it to support entrepreneurship in America. And people have a funny way of thinking about taxes as if it's some, evil cost. It's not. We support our society with taxes. Now, nowhere in the tax code does it tell you that you can't optimize your situation, that you can't put yourself in the best light possibly with the government and pay as little tax as possible. They wrote the code to let you do that. But most people who run a business are so myopically focused on running the business. American entrepreneurship is a full-time job. You're going to work 25 hours a day. So generally what happens is you don't spend enough time planning for your taxes. Now, take it from someone who's been doing this for a long time. I meet with my tax advisors, my accountants, my insurers, my lawyers every quarter, every 90 days. And I spend hours with them planning for that year. What should I insure? What legal structure should I have in place? What should I be doing about taxes? What should I be thinking about for this quarter versus next quarter? Because I'm optimizing for one thing, my free cash flow. A business runs on cash flow. It's the lifeblood of a business. And I'm like every other entrepreneur listening to us right now. I started in the basement, and I learned early on that you have to plan for your taxes. You don't show up to your accountant in early April with a shoebox full of receipts saying, file my taxes. You're going to get killed if you do that. You've got to have an ally, somebody that works for you, with you, understanding the tax code and optimizing your situation for it. You have to do that. Insurance is part of that. Legal advice is part of that. And definitely accounting is part of that. And so even if you don't like lawyers and accountants, you have to work with them and do it on a quarterly basis. Get a review of your situation. The reason I became a shareholder in Tax Hive is I have so many small and mid-cap companies because I support entrepreneurs that don't plan. And certainly during the pandemic, they didn't even have their payroll ready. They couldn't even get the PPP loans. I said, that's ridiculous. We've got to make sure that everybody has access to some support. And for me, that's Tax Hive, and I'm a huge advocate for it. It makes total sense to me. It's optimizing, but the government wants you to be compliant, and you want to be compliant. You never want to get audited. You get audited by not planning.
I'm really glad you brought that up because so many people think they're winning the tax game by having a good professional, and they take their and as all they're doing is having somebody prepare the taxes, put the right information in the right little boxes after the damage is done. rather than strategizing and sitting down with smart individuals and going, what could I do to reduce my tax? I'm so glad you brought that up. Thank you for that. How important is it, Kevin? Most small businesses that I see rely, I believe, too much on their tax professional. They go, oh, I've got a really smart tax guy. I never worry about taxes. How important is it that they become self-educated to some degree? Not that they're going to fill out the tax forms, but learn the tax code enough that there has to be a line. They're building a business. Our business owners or our real estate investors are investing in real estate. But how important is self-education?
It's really important because, you want to understand, particularly if you're an entrepreneur or a family business, you need to understand the pillars of success, as I call them. What is it about the business that you should really focus on? Taxes and estate planning and insurance are often some of your largest costs, but they're also some of your major benefits. And structure really matters. In America, we're an entrepreneurial capitalist society. The tax code is not your enemy. It's your friend. It's there for you to study and understand. You don't have to read the whole thing. There's so many pages, you'd spend the rest of your life at night reading it. But there's plenty of professionals that can help you. But why do you do what you do? Why do you structure? What's the reason you do it? You need to understand that. So, matter of fact, today, just before we got on this call together, I spent an hour with my own tax advisors, my own bankers, my own auditors, talking about planning for the next 2 quarters. I do this all the time. And we make decisions together. What about this move? What about this move? What about this idea? What about this idea? How do we optimize for free cash flow? I'm a cash flow guy. I want to pay as little taxes as I possibly can. I want to plan estate planning so that I can minimize my taxes when I'm gone, and I can provide for those that I care about, extended family members and everything else. And I want to do it on a compliant basis. I want to be on the right side of the code. I don't want to get involved in a tough with the IRS. I have zero interest in that. That's a waste of my time. I'd rather be building my businesses up. And so I'm always saying, okay, what do we do to be compliant, and how do we optimize our plan? What's our best strategy for free cash flow? I can't say that word enough. Cash flow. And that is the essence of American entrepreneurship. And the code is written for you to optimize for that. There's ways to do it. And if you can't do it personally, nobody can, you've got to get an advisor. I don't care how wealthy you are. Very few people know how to optimize for taxes.
Kevin, you're known as being somewhat, value conscious, downright cheap.
Well, thank you.
To say
I take that as a compliment.
That's good. I mean it very much that way. And yet so many business owners that I see go, well, I'm going to prepare my own taxes because I don't want to pay the extra money for good legal or for good tax prep, not only preparation, but planning. What would you say to those business owners?
You're out of your mind. For whatever it costs to get your taxes prepared, you're going to save it because they're going to find things you'll never find. Tax preparation is a full-time science because the code changes, state changes, federal changes. You don't know what's going on because you're running your business. There's no scenario, it's a personal opinion, but there's no scenario where you're going to do a better job preparing your taxes than a professional who spends 25 hours a day studying the code, understanding compliance, understanding the whole process. I mean, you just can't. And that is a really horrible idea, particularly if you're an entrepreneur running a business or a family business, or you're investing in multiple structures in real estate or whatever it is. That's a really bad idea. Preparing your own taxes, I don't agree with it.
Cool. What about, I've got a really good tax professional. I've worked with him for 15, 20 years. Give us your opinion on getting a second opinion.
You know, when you face catastrophic health risk and you're facing surgery for whatever it is, you always get a second opinion. You're always trying to find out the path of least resistance, the optimization of your situation. Why wouldn't you do that in your business? I mean, everybody goes for a second opinion on catastrophic health issues. Why would you do it in your business? Of course you should. Why not? How can that possibly hurt you? If a second opinion can find you more dollars on a compliant basis, on a compliant platform, why wouldn't you do that? Why wouldn't you do that? I mean, it just makes no sense to me. You've got to optimize around the code. The code is there for you. It's there to protect you. And when I say protect you, it means you stay compliant so you don't get audited. But you've got to optimize.
I see too many people that don't want to offend their accountant or their CPA, and so they won't go get a second opinion from someone else. What would you say?
Well,
I know what you'd say. Never mind.
No. I mean, some people say, why do I have to talk to another accountant? I don't like accountants. I don't care if you like accountants or you don't like accountants. You're living with them for the rest of your life. Why? Because they're there for you. They're there to optimize your code participation and your cash flow. Get over it. I mean, it's just like, I don't want to go to the doctor's office. I don't like doing it. Too bad. Same thing with accountants. You have to do it.
And you never hire your accountant because of their tremendous personality. You don't hire your trainer or your coach because of their personality, but because what they can do for you. Wonderful. All right.
I don't even like my accountants, but I respect what they do. I just wanted to tell you that.
I get a lot of people that think that they're winning the tax game because they get a refund every year. Your thoughts?
No, that's not how you measure success. You measure success by optimizing your refund, by optimizing the outcome, by minimizing taxes. That's number one. Every dollar you save is a fuel for growing your business. It's money you can put back in your business or put into your family. I mean, do you want to pay Uncle Sam if you don't have to? No. Uncle Sam only wants what he's due. He wrote the code to give you the map so you give him what he deserves. Not a dime more is necessary. Many people, I bet you there's billions of dollars paid to Uncle Sam that's unnecessary because people just don't read the code and they don't work with the accountants. They don't optimize their taxes. It's crazy. I mean, look, it is what it is, but you shouldn't let that happen to you.
Thank you for that. So let me wrap this up, this section, and just by saying, or by asking, Kevin, what advice would you give to small business, either real estate investors, maybe stock market investors, maybe small businesses? What advice would you give on taxes?
Taxes is one of your greatest expense, not sometimes, all of the time. You've got to learn how to take every single deduction that's available to you. And these deductions change all the time. They change at a state level, they change at a federal level, and you're not keeping up with the code. And that's the whole point. You're missing out on opportunities. And the idea of working with a tax hive and with an accountant that can groom through your situation and optimize it for you is a very good use of time. You're getting paid, basically. Every dollar you save is a paycheck to you. And Uncle Sam doesn't want what he doesn't deserve. He doesn't care about that. He just wants you to abide by the code. And you've got to find professionals that help you do exactly that.
Tremendous advice. Thank you. Thank you for that. All right. So you have, as part of Tax Hive, a free, no risk consultation available to everyone on the call. And this is a consultation with the tax professional. And as all they have to do is go to protectwealth.com/tax hive. And Kevin, tell us about your guarantee on this. Would you? I've read your guarantee. I've seen it. Our students are excited about it. I don't know how to explain it any simpler than what's on the screen, but comment on that, would you? Can you really find $10,000 of missed deductions for most people.
Yes, I've been in the tax preparation business for decades. This is one of the biggest mistakes entrepreneurs make. They do not focus on this. There's so much opportunity to get assessed by a professional to find 10,000 plus. It's not just 10,000. Often it's more. I wouldn't be doing this if I didn't believe in it. I don't put my name on products and services that I don't use. And I don't invest in companies I don't think add value. I'm an investor in Tax Hive. This is a fantastic company. This helps people find their legitimate deductions and enhance their cash flow. I want that for every entrepreneur. I want that for every family. I want that for every business owner. I don't care what the structure is. If you're not optimizing, you're missing out on huge opportunities. Why wouldn't you do this? I mean, spend the time to get that whole thing done. Connect with Tax Hive, get the opportunity to get assessed, and watch what happens.
Thank
We're
you
going
for
to find.
that.
We're going to find more. We'll find more. That's the whole point.
And I've heard you say several times, you asked the question, is your CPA costing you money? And I think more often that's been my experience as well. Sometimes they are. Often they are. So here's what we've got for everyone on the call. If you will go to protectwealth.com/tax hive, you're going to come up with this screen. You're going to see a 30-minute video. And then if you click on that little blue button, as all it's going to do is ask for it. It's going to ask you to sign up for a consult. It's that easy. We cannot make this any easier to get a second opinion on your taxes and have a free consultation with a tax professional. And so with that, let's open this up, Kevin, to some questions from some of our students. For the students, you're welcome to type in some of your questions. Well, we only have a few minutes. We're not going to get to every question that's here. Don't type it into the chat screen, but type it into the Q&A screen. All right. So does your tax company do negotiations, offering compromises with the IRS?
Well, first of all, we try and get you so you're not in that situation. The whole idea of filing taxes, and I really want people to understand this, is the reason you trigger an audit is you didn't file properly. The whole idea of avoiding that negotiation with the IRS is not to trigger an audit. That's the number one mandate of Tax Hive, is to make sure that you are compliant with the code. There's so many ways, and obviously we've learned over the years what triggers and what doesn't, and we're very, very careful to make sure that you're compliant with the code. That's the whole idea. You don't want to get into the situation where you're negotiating with the IRS. That's a bad outcome. The whole idea is to pay your taxes, be compliant, understand the code, optimize so that you keep as much cash as you can, and move on to the next tax year and keep building your business. That is the primary objective of Tax Hive.
Good. Lassie is saying, is it okay to withdraw money from my 401k to put money down on a piece of real estate?
You can do that if you wish, but I always told people to think of their 401k as the ultimate nest egg, because in life, poo-poo happens. You just don't know when. It happens to everybody, and it's really important to have that nest egg set aside. I tell everybody, try and save 10% of your income and put it aside. Invest it in the long-term strategy. Don't put it into a savings account. You're with inflation at 6%, you're getting 22 basis point in interest. Go ahead and invest it in the market. Average it in. Market gives sort of 6 to 8%. Buy an index like the SPY or the S&P 500, whatever it is. But I don't like it when people dip into their savings and protect, unless you really feel strongly about that real estate investment, because often real estate involves a mortgage. I have lots of real estate in my portfolio, and yes, I have debt on some of the facilities, but I understand my free cash flow. I know I can service it. I'm a big real estate guy. It's over a third of my net worth, and it's always been that way. I like real estate. Why? It's a hard asset.
You know what? And my comment to Lassie would be, I had an experience here a few months ago where a student took $2 million out of their 401k, paid the taxes and penalties on it, and then bought a piece of real estate, when they could have simply had the 401k buy the real estate and put real estate. You can do that in a self-directed IRA or self-directed 401k and let that build up. Or your 401k could partner with, your existing cash. You can have debt inside of a 401k. You can have it in an IRA. Before you pay the taxes and penalties and pull that money out, you better have a consultation with Tax Hive and see if what you're doing is bordering on stupid. How's that? Is that fair, Kevin?
Well, listen, that's the whole point of getting advice. I mean, that's a great structure. Why pay the tax? Why not just leave it in the 401k and do exactly what you said, which is an option? And you wouldn't know to do that unless you had an advisor tell you that. Advisors find ways for you to save money and reduce cost and stay compliant.
What is your take on overbidding in the real estate market right now?
Well, inflation is also taking place in real estate, and hard assets are very desirable, and real estate is certainly one of them. Overbidding is a relative term. If you're going to be someone who sells it in a short period of time, 36 months or over, it's going to hurt. But long-term real estate has been a very long-term investment in the sense that it's appreciated very well over extended periods of time. So overbidding is relative. Now, I like to buy, in my case, condominiums in Florida and rent them out. I think that's a great strategy for me because there's an aging population. There's a lot of people who want to come to tax-free Florida, or at least reduce tax, and people like places on the beach. And that's where I focus. I know the jurisdiction. I know, which buildings are what, et cetera. And I do overbid sometimes on units, but I'm thinking long-term. I'm going to rent that out forever, and I'm going to support it. And I just like it because over time it appreciates. It's just one of the things I do. So it's very relative. I'm not against it if I'm thinking long term. I don't really flip real estate. I buy it as an asset. I turn it into an income generating property. And I stay, a lot of people say, oh, that's so boring, Kevin. Cash flow is not boring to me. I like cash flow.
And I noticed Chris Brown, the president of Tax Hive, is answering some of the questions. And so, Chris, we appreciate you being there. Someone's asking, can you share, please, some structures used by yourself as a billionaire to minimize taxes as far as estate taxes, capital gains taxes are concerned? How do you reduce estate taxes?
Well, look, I'm like everybody else. I do a lot of estate planning. I listen to my lawyers. I listen to my accountants. I have various structures and trusts and corporations. And the point is, before I make an investment, I always get my team together. We do it on Zooms. My own internal people, my lawyers, my accountants, and the people that keep me compliant with the tax code. And we have a discussion about the investment, where it's going to go into, where it's going to be held. I mean, I'm talking about tax planning 101 here. I don't just make these decisions on my own. I listen to my advisors. I say, look, I want to put X dollars into this company. Where should it be put? What structure should it be in? What's the optimized way to do it? And they know that going in. So as I'm managing the investment over time, they remembered how we put it together. I listen to advisors because I want one thing. I want to be compliant, number one. That's very important to me. But I also want to optimize. I want to optimize long-term. I want to reduce my taxes. So yes, I use lots of different structures, but they come out of the minds of my advisors who've done this forever. I mean, they spend all day doing it. I'm an entrepreneur. I'm an investor. I don't spend my time worrying about tax structure. I've got professionals for that. That's the whole Tax Hive story.
Good. All right. Would you please comment on investing in Coinbase and crypto? I've heard your analysis on this, and I think I'm glad that this question came up. Thank you.
Yeah, I mean, look, Bitcoin is not a coin. It's software. Ethereum is software. Polygon is software. HBAR is software. All of these different bit changes software. The way, and if you're willing to invest in Microsoft or Google, that's software too. So I look at it that way. But I always have a rule about investing: never more than 20% in any one sector, and never more than 5% in any one stock. So yes, I own these software products. I own Bitcoin. I own some Ethereum. But to me, it's software. So I use that rule. I don't have more than 5% in any one of these things, and I certainly don't have more than 20% tied up in it because it's just another sector. I believe over time, cryptocurrencies and payment systems and decentralized and centralized finance offers a lot of opportunity to the financial services industry to reduce cost, add productivity, add transparency. All of these things look good. And software development, it'll probably end up being the 12th sector of the S&P one day, maybe in 5 or 7 years. But it's still a sector, and I never let more than 20% of any portfolio in any one sector. So I'm just diversified about it. But yes, I have some.
Okay. Teresa is asking about estate taxes in Washington State. And if you don't mind, yes, there are some states, there are about 8 states that have a death tax or an additional inheritance tax. California is one of those states. Tax Hive can give you some good ideas on that. And also during the summit next week, I'm going to show you some maps when we talk about case studies, and I'll show you what those rates are. Kevin, are we in a real estate bubble right now? Should we be concerned about the increasing prices of real estate?
Real estate is in a different transition now than it's ever been before because of technology allowing people after the pandemic to work remotely. I thought 15% of my employees would never come back to the office. It's more like half aren't coming back. And so they've moved out to rural regions. They want to live on farms. They want to live in small towns. They want to raise their children, take care of their elderly parents. They don't want to commute anymore. And so real estate is changing everywhere. And I think people are looking beyond just the highly dense cities to live. They want to move out. And I think that's one of the reasons you're seeing such appreciation in all kinds of different locations. You know, maybe people didn't want to live in Champaign-Urbana in Illinois anymore, but now they do because it's a fantastic lifestyle and it's a wonderful place to live. And it's not too far from major metropolitan areas. And because of technology, you can work there. So real estate's an opportunity. Commercial real estate's a little different. It's going through a lot of transitions. I talked about Foot Locker earlier. That's 1,200 square feet. Probably not as great an investment as some house on a farm somewhere. So commercial's under pressure as we transition to a direct-to-consumer model, you know, in the economy. But, you know, domestic real estate, houses, rental homes, homes that have offices in them that are going through renovations are continuing to appreciate in value because there's such demand for them. So
that is sustainable, that growth, for a little while then?
I think so. Even though rates are going to go up, we're still in very low rates compared to historical rates. And people want to live in places where they can grow a family, where they can be safe, where they don't have to commute. There's a lot of demand for that. And I'm an investor in real estate because I just like the fact that everybody has to have a home. And I like to rent facilities. I like to, you know, to me, it's always been part of my portfolio. I'm very comfortable with it. And I like the real estate as a business.
Okay. You know what? Let me summarize what your offer was one more time. A lot of the questions that you have are specific to your particular situation and relative to asset protection. Remember, next Monday, we've got some of the best attorneys in the nation here to address asset protection, which is really not our focus on this this call. And so we were really talking more about taxes. Let's go over this offer one more time. And Chris, if you're in the background, if I missed something, will you kind of add that on here?
You bet. I'd love to, Don.
Okay, so we're talking about a risk-free consult that's free with a tax professional from Tax Hive. Chris, anything? It's about as no-brainer as we can make it. Mm-hmm. You'd go to protectwealth.com, hit /Tax Hive, and this offer is still good.
Yeah, Don,
Chris, go ahead.
You know, I just say, number one, just thanks for having us on. And Kevin, as always, we're just so appreciative of your expertise, your partnership. We love working with you and the value that you bring to our partners like Protect Wealth. So thanks. At the end of the day, Don, we've just done this long enough. We have surveyed thousands upon thousands of business owners. And based on that, we've got the experience where we know where the majority of businesses are leaking money. We know things that they could do differently to shore things up. And we believe that the proof's in the pudding. So because of that, we'd certainly love to earn everybody's business. But at the end of the day, Kevin's blood of entrepreneurship runs through our company, and we want investors, business owners to succeed and thrive. That's the heartbeat of this country. So we'd love the opportunity to earn your business. But even if we don't, we'd encourage you to spend some time with us. Let us point out some areas that you can make some improvements, and go implement those improvements and keep more money in your pocket. So give us a shot, give us a few minutes of your time, and I'm confident that we can point all of you in the right direction when you go to protectwealth.com/Tax Hive. So just thanks for having us on, Don.
You're welcome. And then we do that as a service to our clients. I can't tell you, running an asset protection hotline for 22 years, one of the most frequently asked questions is, how do I find a good tax professional? We've made it as simple as we can with friends that we trust. I know the owners. I've worked with them for almost 20 years. I know I've spent time with their CPAs. They're very consistent with what we're always teaching you about taxes. Please take advantage of this. So Kevin, before you bow out, and thank you so much for your time, but any closing thoughts you can leave us with? Well, I think you're on mute, Kevin. There we go.
I just wanted to say that I'm the only guy that loves to talk about tax preparation. I can't tell you how long I've been concerned about this. The first thing I do when I invest in a private company, and I'm beside the entrepreneur and helping them out, is who's doing the taxes? Who's advising on the structure? Who's working with you to optimize free cash flow? And if you don't know the answer to that, I'm going to fix that for you, because that is number one. You have to do that. I don't care if your sales are $10,000 a year. You've got to put that into your protocol. You've got to start thinking about it. And as you grow, you optimize. Now, why wouldn't you do this? Talk to somebody at Tax Hive, get a free consultation. I pound the table on this. I really believe this helps entrepreneurs. So take advantage of it, and let's see if we can help you too.
Thank you. And for all of those that have been on the call and we haven't got to your questions, it'd be a good time to maybe sign up for a consult and ask them directly about your situation. Remember, if you haven't attended our 3-day summit, you can still sign up for that. Kevin, so grateful for your time and
thank you very much. I really enjoy these conversations. I'm motivated by this. I think, please think about this as something it's not an option. You've got to do it. You have to focus on this. This is how you optimize your business. Take care, everybody.
Thank you. Thank you, everyone, for being here. Have a great night. Bye-bye.